right, hey guys, Sam here with you on Wednesday, November 7th. And as it's a Wednesday, we will poll our members, let them decide what we're going to review. And by request, first up is a look at EOS to the dollar. So I've got it up here. This is EOS to the dollar on Binance. We've got people trading it on Binance and Bitfinex. So we'll look at it on both. But I thought we'd start here. We get kind of a bigger picture perspective. Now, we do have this pattern here that I call the Piranha. And we've just got a series of contracting triangles here as we get tighter and tighter and tighter. So you can see it here. If I work from the swing low here, and I'm just got my wolf range on here, and I work to my swing high, we're essentially smack dab in the middle. All right, so we're coming right to the jaws of the Piranha. So as this tightens and tightens, now, of course, the question is, where are we breaking here? So we've had a couple of false breaks, right? So you can see here, that's what creates the Piranha. So we have the larger downsloping trend line here contained by the inner, and the same thing below. So we get this decision point. At some point, we're going to break out. So here, are we breaking? Are we going to retest now that we're coming back down? You could do the exact same thing here and just work from here to here, and so we get this little confluence zone here, or you might think of it as just a decision point where we're going to break one way or the other. So, you know, this little move here is rather interesting, and it's quite technical, so we're going to focus on this. Can we get a count on this? Yeah, I don't know that it's particularly helping us to try and work through a count here. I think what will define what happens next is which way we break. So recognizing that it could break either way, let's focus on this swing here and see if we've got the ingredients here that might suggest the start of something that could be bullish. So the possibility, of course, is that we'll do something along these lines, then get the break out of the Piranha and get our move up here, and we get started on something significant. We get a good clean. Ideally, you'd get an impulse coming out of this. But of course, recognizing it could just as easily go the other direction. So if we're going to come down here and break and then challenge this side, there is equally this possibility. Right? Come back down here and challenge those old lows. So it's unresolved here. But this is starting to show some signs that might suggest that we resolve higher here. So if we put this back into some perspective of where you can see where we're coming from here. Now, we don't have as much data on Binance as we do on Bitfinex. But just looking down here, so pull this off here. So this was equally technical. So we're just grabbing from my swing high to my swing low. All right, here's our 50. So there will be algo targets below. So question is, how do you deal with this? Recognizing that we could break either way. Well, let's see if there's enough evidence here to support the idea that this first retrace sets us up for that move that would be, of course, bullish here. So we pull and then we push out of it. So let's go to, actually, I'm going to do this over on Bitfinex, where I have some work already done. So I'm just focusing on this last low here coming out of put us into the Piranha here, that now starting to move out of it. So I'm down on a 30-minute chart. Now you'll notice I do have median lines here, of course. So I'm working from this pivot low here, working for this first impulse down to this. Now we got to recognize that it's really a judgment call. This is impulsive, but to try and dig the count out of this, right? So this low, we're coming back up here, and we close the bar here, and then we roll down again. So it's really, it's a bit of a stretch to try and call this 1-2 or 1-2. There's not a great way to resolve that. Of course, the other possibility is that we just have a double bottom here, and that this spiking action here, so if we pull it over here and look at it this way, this spiking action here, right, we can't ignore it, but we just don't have any shape to it. And we have the potential that as we bounce out of this deeply oversold point here, it's almost like a bouncing ball. Like we hit and then we bounce, 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 and then we get the impulsive push out of it. So I'm inclined what it forces, you have to evaluate from both pivots to see where the better fit is. Let me tighten this up here because we've got some interesting things happening here, which you can see right there. So let me pull out on this a little bit. Can't we make a case here for something impulsive coming out of this? Well, it's not perfect, but it's not bad, right? There's some things to take note of here. So what you can see here is what we've got this sort of stacking, even if we include this. We've got kind of this stacking of swing, retrace, swing, retrace, swing, retrace, swing, retrace, and we're coming back to the structure. Right? So you can see it rather clearly defined. Now, from an Elliott perspective, we're forced to just make, for lack of a better description, an educated guess as to where we're going to start this count. So the only way you can really dial in is by doing some measurements and see where we're technical, where we're getting some pivots here that would make sense to the count. And these, the fact that we overlap here, but we don't overlap here and we hold here, those can be tells to the structure here that can help us identify the Elliott count. So recognizing that we have this median line here, I'm gonna pull that off just to clear up the chart for the video review here, so we can get a little better look at it. So working off of so first we'd start with the dominant low. So from swing low, and I've got the wolf range on here, right? So just working from my swing high, we get it right on there. All right. So do we have the range of the market? Well, let's look at what we've done. From our swing low to our swing high, here's the 100. We're getting a reaction here. We're to the tick at the 200. So it makes you think, okay, well, this is certainly a technical pivot. So what else can we do? Well, if I grab my swing low here up to my proposed wave 1 and I pull this over to what would be a wave 2, that might be one way to look at this. Well, so if this is 1, 2, potentially so we're past the 2618, but we're here at the 200% of the range. So I've got a contender here, reasonable contender here for the larger degree 1, 2, 3. So of course that's dependent on us being able to identify a motive wave here, or pardon me, an impulse from this. If we're going to allow for this ugly 1 and a shallow 2, right? We don't even make the 50. But once we get from this pivot here, we start to get technical, right? As you can see. So if I pull this off and we just go back to our traditional measurements. Well, if I work here from this as a 1, it's kind of forcing you to continue to measure. So if I go from this pivot to the slightly higher pivot, and then I work off to the side, what do I get? All right, so here's my ideal zone where I'd be anticipating a wave 3. But it doesn't fit here. That would be, so this would be the wave 3 relative to this one here in white. So if I look here and I go, well, shit, okay, so that's telling me something. So do I need to reevaluate and put the 1 here? So then I've got to dig a 1, 2 out of this, right? So this count would be, we'd be rethinking that. So can I go 1, 2, 3, 4, 5? Well, I can. You have to allow for this kind of a ugly diagonal to start us out here. Let me get that. Let's go down a degree here so we can get our arms around that. So could that work here? So let me take that one off. So if this is 1, well, I gotta say I do not like the 1, 2 here, but this is just, it fits better. So I'd have to go 1, 2, 3. Yes, I checked it. So it's if I've got the 1 here at this little pivot and I'm coming down to the 2. Well, note here, right? So we get it again. We're getting that 1618, 175 here. So that's what leans me into the idea here that I've got to allow for this 1, 2, because this is a perfect 3, 4. We don't overlap the 1. Up we go. It ain't pretty, right? So at this distance here, we might be able to get a 1, 2, 3, 4, 5. We went down to a 15 or even a 5 minute. Let's pull this off. But right now, I'm willing to allow for this ugly 1 because of the technical nature of what follows. So that means I've got to get an impulse out of this. If this is my 2, so pulling this down here, if this is my 2, this is my 1, well, I can get 5 out of this, but it wouldn't be long enough. Right, so if this is our 1, this can't be our 3, because here's 100%. Now, right? So you got to look at this and go, well, so where is the 1 here? Is this 1, 2? It's a process of trying to use your best judgment. So if this is 1, 2, well, I can get a 1, 2, 3, 4. So that looks like you'd be going on a smaller degree into another 1, 2, because it's not good enough to call that 3, 4, 5. So maybe the 3 has to push higher. The 4 pushes higher. So, pardon me, this 4 would go over here, and this becomes our 4. Because if this is a 1, 2 here, I've got to have an impulse to follow it. I've got to follow it with an impulse. So here's the bit of a tell right here. If this is a 1, 2, 3, so let's look at that relationship from a fib perspective. So if this is 1 and this is 2, well, how do I look here? Well, right here's the 100, right? So we certainly qualify 1, 2, 7, 2. Right? It's not unseen. It's lower probability here than the 1, 6, 1, 8. But given I've got this nice little ABC, I don't overlap the 1. The structure is more supportive of this as a 1, 2, 1, 2. Well, that's bullish, of course, if we're going to go up and finish up here. So obviously we've got the makings of a pretty tight channel. So if I just pull this, we look here. Well, you'd probably look at both of these. So if I look here and go 1, 2, 1, 2, 3, 4, this suggests that I've got one more push up here. I have the potential for this to come up and complete, giving me the 5th of the 3rd as I come up to that. So, well, I can certainly measure for the range between the length of the 2, looking for something technical on the 4. Well, here's the wolf range. All right, so amazing how consistent. But if we go, let me get that back here. So let's get the traditional measured move here. So here's my 50, here's my algo target, right? So it kind of sets itself up rather nicely. So we've got to push this off. So 1, 2, 3, 4, 5 into a 1. Do I get a 50 there? Well, if this is my 1, then I only make the 38. Now again, it's not that it's unheard of, it's just lower probability. So we have to allow for this as a 2 on the assumption that the price action is going to support this move here. Now, if it breaks down and we start, well, so first would be if we take out this pivot, right? we cannot have that. So from strict Elliott rule set, if we violate this pivot here, we have the count wrong because we can't have a diagonal in the 3rd. So the reason I focus on that is because it sets up a higher probability trade. So we can be a buyer here with a very clear exit, knowing that if I overlap this 1, I'm wrong. So if I buy this, if we're going to continue to pull back, I've got my target. I know exactly. It only needs to break it by a tick. We invalidate this count. Now, interestingly, here's my Vegas wave right here coming in, potential support. So if this doesn't hold, so this very, very low risk. So looking at that risk reward, it's 6.3 to 1. So kind of hard not to like that. So if we dig into this correction, do we have enough here to support the idea that the low is in? Let's pull this off. So we could have, so we have the potential here. So we've got 1, 2, 3. So it looks like A, B, C is potentially there. So we've got A, B possibly coming down for a C. Now that's a bit silly on the degree here. So let's get, come here. Let's go sub-micro on that. So this would come up a degree here. Let's go. We'll go to micro there. Let's put that in green. Okay, so that would give us potentially an ABC. Well, are we technical here? So if I work from that swing high to my A, we break the 618. We know a B often will go beyond that into that range between the 618 and the 786. So that's prime zone for a B right there. Nothing wrong with that, right? So there's our B. Now pushing down from this, it's a couple of different things we might look at. So we're already through the algo target, so let's see if we have any swing relationship between the length of the A projected from the B. Well, if we're going to break the 100, the 1272 is a strong contender. So the other possibility here is that we've got this coming down one more time. So look, so if we're going to go 1, 2, 3, maybe 4, 5, could we finish with a diagonal? Now that puts all of this over here. So let's put this, let's get this and go with this in blue. We'll go down a degree, bear with me here. Okay, so nice little channel shaping up here as well. So are we coming down for a landing that would look like this? All right, so this would be 1, 2. Let's get that in white so you can see it better. Okay, so this would be 1, 2 of our C. So we've got A, B, 1, 2, 3, 4. Now note here we have a very slight overlap. So we can have an ending diagonal in a C wave. We can finish with a diagonal. So let's wick that off just because that's important. Get that right on there. So here's that's all you need to break it. So 1, 2, 3, 4. We come down for the 5. So we're looking for a technical pivot. Let me clear some of this up. We're looking for a technical pivot between the start, well, sorry, wrong pivot. Between the start of the 1 and the pivot of the 3rd. Right, well, here's the 38. Ideally, you might look for it at the 50, but here we are at the center line of that channel. So if this has one more push down, right, that gives us 5 into an ending diagonal. But look how tight we're going to be on that pivot. So you really pretty much have to assume that we're going to come down one more time. But you could essentially trade this with an incredibly tight stop. All right, so if we're going up for that, there's 10 to 1 right there. We go back to the old highs. Right, now, Grant, I understand that's incredibly tight, and you're trying to pinpoint that turn. Not easy to do, all right? And it's so the other thought is you just let this come down here. Let's see what the reaction is. If we hold and start to move away, well, that's where you can put the trade on because the risk is so low. Right, there's 16 to 1 if we just do nothing more than come up and challenge that high. Now, if we're going to go up to that target, where's our target up here? Well, we know that's up. We identified it here as the 5th. There's 24 to 1. You know, I mean, it's hard not to like that. So, I mean, yeah, we're trying to do it with microscopic precision here, but it lends itself to it. So why not? When I look at the risk reward there, I go, shit, man, why would you not take that trade? If we get this, right? So if we come down here and finish, now we're finishing at exactly what we're anticipating. But if we're going to go to algo target, well, we're breaking that 1. So it doesn't mean that we can't ultimately come from this level and move higher. It just means we've got the count wrong. You understand? So this can provide the structure. So we might come down and break it. Maybe we go, look at this. So maybe we come down and we get into the Vegas wave, right? Natural support here. We could go to the 233 and then we start to go. Well, if you took this trade down here, well, you're stopped out, but talk about a low risk trade, right? We're all going to survive that. So if this comes down here and we do get stopped out, now we got to revisit the entire count. Right? It was a bit of a judgment call all the way through, trying to get the 1-2 to work and then follow it with a 1-2. So we'd have to reevaluate. Now, depending on how far this goes, we might have to reevaluate the entire thing. Maybe this is just an ABC of some sort and it's corrective. I take you back to the Piranha. So let me open this up here again so we can see it. So if we're going to come down and we're going to start to show weakness and break the inside, and then right, that potential, we can't, just because we've had this move, we can't just look at the market through those optimistic bullish lenses. We have to recognize that this is a very real pattern because we know right here, if I just change the, let's go back to my measured move. I've got a target down here, right? So we know an algo sold there. That's not, I don't have to wonder about that. I know what happened there. They've got that target there. Now we don't have any help on this side, right? So if we come here, if I get right, oh, well, we've broken here, but interestingly, so if I go swing high, swing low, well, clearly we've broken, but look where we're sitting right here. Look at this, look at how the golden zone is just giving us the lower end of this range. So if I just highlight the golden zone off of that pivot, look how many times that's been support. Is it influencing the market? Well, swing high to swing low, it's been broken, but here's the 786. So look, 786, 786, coming up, here's the golden zone, right? So this still has very real potential to come down here and get to that target. So you can't take that off your chart and go, oh, shit, I don't have to worry about that anymore. Absolutely not. That is a very real possibility. Well, we're 0. That would put us down here at $2 in EOS. Do I think that's going to happen? No, I don't. But I can't turn a blind eye to it. I've got to recognize that possibility is there. So if I'm looking to be a buyer inside the Piranha, I am making an educated guess that at some point we're going to push out. Well, in this case, we'd be looking for the push out to the bullish side. Recognizing it can go either way. So if we come back here and think about this, so I like this because of the very low risk play that it sets up. Now, it's hard to call this complete, even though we've come to this support, this structure here, and we've had this bounce. If you're viewing the market through Elliott Wave, we are not done yet. But I do love how this sets up this very, very low risk trade here. Now, we may not get there. Nothing says we have to come down here and take out that low. We could double bottom. We could hit this to the tick and bounce. It just takes one tick and we're stopped out. So I'd be looking at that carefully, watching for that. So I'd want to have alerts going off as I approach that. Ideally, it happened when during market hours where you can see what's happening here and not in the middle of the night. But even if you put the trade on, right? Welcome to crypto. Let's hope the stop gets filled. So if you were a buyer here and went to bed with that stop that tight, again, even if there's right, that's just the reality we live in with crypto. You cross your fingers that stop gets filled. The other thought is you look to buy it with that very tight stop, and you should get some sense of a reaction from that relatively quickly because it's so close. So close. And you got to pay attention to the possibility that it breaks on one exchange and doesn't break on another. So yeah, I would keep an eye out for, so as far as I'm concerned, a break on any exchange means it's a break. So we can't trade bullishly on Bitfinex if it doesn't break against over here on Binance and it does break. A break is a break. So that's just the reality of a lack of a standardized price point in multiple exchanges, right? Welcome to crypto trading. That's the reality we live with, at least right now. So pulling this back out here, having gone through all of that, I'm full disclosure, I am long as hell on EOS. Just for long term, I think this is such a strong project. I'm very bullish on this long term. So what I'm looking for are places to add. So would I risk that to add? Sure. I'll be taking that trade. Let's pull that off here. So we know because the risk is so low. So again, why would you not take that trade? Right? Not going to hurt me if I get stopped out. Okay, so all of that complete. Yeah, right. It's a good sign. Good sign that we've got the potential here to finish this. Now, keep in mind, all that's doing is finishing the third. Right? So if we go here. Now we've just got the third. Now we're anticipating this, maybe back to the channel. So here comes our 4, 5 still yet to come. So there's a roadmap that you can lean into that has some opportunity. So if you get this, right, the 4 is coming. So this would be a target to maybe bank some profit. If you want to stay long and ride it, I take a partial profit here because you know that well, let's measure it. If we complete there, and that's our third. All right, so let's come here. We've got our 2 identified. If we complete, right, it's purely hypothetical. Look where that puts us here as we hit this channel, right at the 38. So where would that target be? Up here. All right, so up now here, we don't know exactly what time we hit that or when we hit that or if we hit that. But there's a roadmap for EOS that looks quite technically sound. So next opportunity, can we hold? All right, if we get it and we start to push higher, I'd take at least a partial profit here, recognizing that 4 is likely to come. There's your target, and all that does is complete one wave. So let's go back out here. All that does is complete. Let's try an 8-hour. Maybe that'll do it. Maybe not. Let's see if I can get a look at that. That's too much. Let's go 4-hour. Put it in perspective. Maybe I got to do it that way. Can I scrunch this so we can see it? There we go. Okay, so let's from this swing to our absolute low down here. All right, if we're breaking that would be a positive development. We'd be breaking. Look, the target is just on the other side of the 65. All right, so now we know at the next 50 we've got an algo teed up to work with us. All right, pulling back here. What's next? Right, you got to check every single one of these. Every one of these, because we don't know until we see a reaction which one they're using. What's the one I know they'll use is the dominant, right? That's the dominant high as this moves down. Here's the dominant low. So what happens if and when we get here? Right, note we got a pretty solid range of resistance there. So can we get through this? Well, it's a start, right? So if we can get a nice 1 coming out of this, and we're going to go 2, and then we're going to go, so all that potential still very real, still very much there. That's the big play. We're just trying to get on board for that. Can we get on board, anticipating that if we complete this up here, there will be a 2. We know the odds are that's going to go to the 50. So if you got that, you don't want to give back 50% of that profit. But here's the one you're trying to get on board. You're trying to get that. So, of course, the other alternative is you wait. You let this resolve. See which way the Piranha bites, and then if we break out higher, wait for that retrace. That's the more conservative approach, and you take that move down. So we'll get a little A, B, C down, and you take the big push for the third. All right, guys, that should give you enough to work with there. If I can get that unstuck to my mouse. So that's the potential roadmap there. It's interesting. It's challenging technically. But if you work with the tools that you've gotten that we teach you, you can make sense of it. You can at least set out a roadmap. All right, guys, that went kind of long there. All right, I'll wrap there, and I'll be back with one more.